You are listening to ChartingWealth.com's Training and Trends for Thursday, the 20th of August 2015. Let's jump right into the charts. We're looking at the total market IYY. Why do we hate this time of year? Because of what you see going on starting about the beginning around the 5th of August running through today. It has been up, down, up, down, up, down, up, down. And that is no way to trade a market. And that, folks, is the two-day chart. What do we have going on right now? Well, the market crossed over back around the 18th, going up. It crossed over the day before with a green candle, and now today it's crossed back over going down. What has been leading us on the truth so far? Well, what do? We talk about backtracking all the time and learning from the past, doing things that work depending on what season you're in. We're in the summertime trading zone where the trading is very thin. What do I mean by that? Sell in May and go away. A lot of the big money's out of the market and hasn't come back in yet. What does that mean? Without a lot of volume, just like a bathtub, it's a whole lot easier to splash the water out than it is to jump around in a lake and expect the water to surge up over all the sides of the lake. Doesn't happen. Well, when you have less volume, like you have a bathtub, that's more what the summertime trading zone is like. But let's look at the derivative oscillator. What do we see? The derivative oscillator has been showing us a lot lately. It has never crossed over going up. Once it crossed over going down when the market bled off starting around the 21st of July on our big chart. So where are we now? We crossed back over going down. We have a red candle for today. If we go to the two-day chart, go from the two-day chart to the 4-hour, the half-day chart, we can see a crossover going down on the small chart. A lot of movement down this afternoon, not quite as much, in the morning. Then it switched over in the afternoon and didn't go down quite as much. Overall, the total market down 0.80%. That's where we are in the total market. Now let's jump to the Standard & Poor's 500 as represented by SPY, the exchange-traded fund that tracks the big Standard & Poor's 500 companies. About the same kind of thing that you saw with the total market. Again, the derivative oscillator has been rolled over since the 6th. The MACD has been going up and down and oscillating more than it should, but thin market. Lots of sliding sideways action doesn't make for a good MACD. We see a red down candle on the two-day chart ending on today, which is Tuesday. Seems like it's already Thursday, which is Tuesday, the 19th. Now let's look at the 4-hour chart. What do we see? Well, lots of down movement this morning, and then in the afternoon on Tuesday, we saw a little bit of up movement. Overall, the SPY was down exactly the same as the total market, 0.8%, so not quite 1%. Now, let's go back to the two-day chart, and let's track the Qs. What is the Q showing us? Well, the Qs, my favorite tradable chart, crossed over going down back on the 10th at the same time the derivative oscillator did, which is what we like to see as far as verifying movements for us, and it has continued down. A down movement today. Derivative oscillator has led the way. MACD is moving apart, diverging, not converging, so the signal line and the MACD, the blue line, are moving apart. If we drop back to the 4-hour chart, what do we see? We see the 4-hour chart has crossed over going down, which shows us what we like to see. We already had a downtrend on the total market, as we've talked about before. I'm sorry, not on the total market, on the Qs, on the two-day chart. And when you have the 4-hour chart roll back, means that it went up starting around the morning of the 17th of August and now has rolled back over. It's typically a time that you look to try to enter into some down movement on the Qs. I encourage you to practice that. The best time to always trade is when your small chart turns in the direction of your large chart. Because remember, it's a bigger wave. The smaller wave tends to move in that direction. And when you see it pull back, as it did back around 4 p.m. going into the 17th of August, move up, and then cross over as it did this afternoon going down, typically a good sign for a rollover and a down move in the Qs, particularly in light of the fact that the total market and the Standard & Poor's 500 are in down moves. So that is a great training moment. I hope you're paying attention. Now let's move to gold. Gold, of course, we saw crossover beginning around the 12th, crossed over at the same time our derivative oscillator did, which is what we love to see, means strong, bold moves are going. What does gold continue to do? Go up. It's about time it had bottomed out, right, folks? Those of you who are gold bugs. Let's look at what the 4-hour chart's showing us that that 4-hour chart crossed over back on the 27th of July and has continued to track up so nicely. Hope that those of you who are in gold, whether you know what you're doing, you made your own decision, or you are actually listening to us and doing it on a fake trade. Well, we don't like to call them fake trades, virtual trade that you've opened up at a brokerage firm, made yourself an instant virtual millionaire, and that you've been watching your money accumulate as gold has been climbing. We are happy to see that. Hope that everything's going great for you. You're having a good week so far. Continue to pay attention to us every day. Follow our training. Oh, by the way, we just put up online a really great short training. Go check it out at the website, on Facebook or Twitter. It is a wonderful training that we have put out, teaching you very, very quickly a down and dirty. If you've got friends that don't know a lot about the charts, but you want them to learn and to be able to follow with you what's going on, send them this video. They will love it. It'll motivate them. They can learn enough knowledge to get themselves busy and to start studying and following us every day and knowing what the hell we're talking about. Thanks so much. Again, chartingwealth.com. We wish you the best.